If these types of swings are disturbing to you, then alright, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. It is the weekend, so I want to update everybody on the 10K challenge. So this started on January 1st of 2022. If you want to learn a little bit more about this, I did an explainer video on the 10K challenge. Otherwise, it's fairly self-explanatory, and I'll describe it as we're going along through the video. So if you're new to the channel, please subscribe and hit the notification bell. And of course, please smash the like button and drop us a comment below on what stocks you think I should have in the challenge. I will be adding more stocks over time. Okay, so let's take a look at what happened this last week. So looking at the indexes, you'll see that at the end of the day on Friday, we actually had a really nice surge, and Friday turned out to be a very up day. It felt like a disaster all week. We really kind of ended up where we started. So just to explain, the way we did this challenge is we put $10,000 in cash in an account on January 3rd. We're not going to add to that all year, so we're not going to be putting cash in each week. We're going to take that $10,000 and invest it over time with a few goals in mind. Number one, we want to make money. That's obviously always what we're here to do from an investing standpoint. So we want to make money in the challenge. Number two, I picked the four major indexes, the two largest precious metals, and the two largest cryptocurrencies, and we're going to measure our portfolio against the progress of those things over the course of the year. So the second objective is, of course, we want to beat all of those. If we can't beat all the indexes, then we might as well just invest in the indexes. And the third long-term challenge is to take $10,000 and turn it into $100,000. So I expect that to be more than a one-year journey, but we do expect to hit all of our other goals in this year. And as you guys know, so far this year has been very, very tough. This was one of the worst Januaries ever. The Russell 2000 hit bear market territory. The others are not quite there yet, but they're all in correction mode. And January was a very, very tough month. We need to be able to make money in good markets and in bad markets. So that's going to be a part of what we look at as we go through this journey. All right, these are all my positions in the portfolio, and they are in order by size. Although I will tell you, none of them are dramatically bigger than any of the others. The only exception being the two options at the bottom are smaller positions. So you'll see I still have the same 10 positions I had last week. I did not add any new positions to the portfolio this week. I did, however, dollar cost average into several of them. So I can tell you I added to my position in Bitfarms. That's the number one position in the portfolio. But right behind it is a company called Romeo, and they're in the EV sector. They did a shelf offering this week, and their stock crashed 17% in one day as a result of that. So that was a very good buying opportunity. Obviously, it didn't help the portfolio this week, but it was a good buying opportunity. So I averaged into that as well. I also averaged into Curiosity, stock ticker CURI. So I did get some chances. There were some opportunities this week to dollar cost average into things that I already owned. None of the other things on my watch list hit any of the price targets that I have in mind to buy into them. So if you want to know what my watch list is, basically just take a look at the videos I've done, because if I've done a video on it, by and large, it's a stock that I'm interested in or that I already own personally, and it's certainly on the watch list for the 10K challenge. So there's a bunch of stocks very close to where I want them to be, but they didn't quite get there yet. I don't think the downward pressure is done. I'm not predicting disasters in the stock market, but January was awful, and I think it's going to be a volatile market. So it'll have its ups and downs. There may be more downward pressure. We may head into a bear market in all the indexes. We'll see. So I don't know that that's going to happen, but I do think there will be opportunities to continue to buy in, especially we deal in small cap, high growth stocks. Those have gotten beaten down more than anything else in the stock market. Also, we deal in the small cap EV sector, and I did a video this week on the EV sector. The EV sector got destroyed this week. So those are more volatile stocks. So I think there will be more potential buying opportunities in these types of stocks. Just as they are more volatile on the way down, which is what is happening right now, they also share that volatility on the way up. So some of these stocks have pulled back 80 or 90%. So they have huge, massive opportunity for upside. And they don't have to go hit their 52-week high to go do that. If you're down 90% and your company has good fundamentals, you're probably going to have a lot of upside at some point in the future. The question is, how long, and when. Okay, so let's take a look at the portfolio. So again, we started with $10,000 in cash. Now has a net value of $7,868. So we're down 21%. So that was the month of January. The portfolio is down 21%, available for withdrawal. So there's still $2,843 on the sidelines out of the original $10,000 that I have not yet invested at all. And like I said, I'm still waiting for some of those opportunities. I used about $500 this week to dollar cost average into a couple of stocks that got hit hard and presented an opportunity. As everybody should do, I am saving some powder for future opportunities. So I'm not just going to jump into all these stocks, allocate the entire $10,000, and then just be stuck. So basically, of the original $10,000, we still have 28% of our money not invested. We'll see that the portfolio is down, and this is a part of the process. So I want to share this with you guys every week. I'm not just going to show you on the weeks that I'm up and on the great weeks and then disappear on the bad weeks. We got to go through this whole journey together, and every week matters. I'll say the same thing I said last weekend. It could get worse before it gets better, because most of the stocks that we're picking are small cap, high growth, and those are extremely volatile. What we have to do is make sure we have companies with good fundamentals, and as those continue to fall to unreasonable prices, or what I consider, in my opinion, to be unreasonable prices, we have to keep our resolve and dollar cost average in, because those are buying opportunities if they are good stocks. So obviously, if I've picked the wrong stocks, I'm going to lose. But if I pick the right stocks, and these are good companies and healthy companies, then they will make money over time. And, down 90% is a rare opportunity. The downward pressure in the small caps over the last 3 months is fairly unique situation. It is highly unusual for such a large percentage of the stocks to be down 70 or 80 or 90%. It's very painful as they're falling. You can't really guess the bottom. So all you can do is dollar cost average into strong companies. A lot of people could have started dollar cost averaging in down 70%, thinking that's a fantastic opportunity, and now all of a sudden the stock is now down 90%. Well, if 70% was a good opportunity, 90% is a better opportunity, as long as your thesis hasn't changed, as long as there's no new news that changes the trajectory of the company. So I have not sold any of my stocks. In fact, I took a few and dollar cost averaged in to strengthen the size of my positions. So when we see the portfolio down 21%, we need to understand what that means. And this is a part of investing, and that's why I want to share this on a weekly basis. If these types of swings are disturbing to you, then you may not be the right person to be investing in this extremely volatile market. And that's fair. Everybody has a different tolerance level for volatility. So again, you've got to have conviction in your stocks. You've got to know your stocks. You've got to understand what they're doing and what their potential is, because if you don't, and you're just taking either my recommendation or some other YouTuber's recommendation, as the stocks continue to fall, you will have no conviction. You won't have the proper due diligence and knowledge basis to understand what that stock is, and you're going to do what almost everybody does, which is buy high and sell low. Okay, so having said that, let's compare how our portfolio is doing to the indexes, precious metals, and cryptocurrencies that we've chosen to rank ourselves against. Okay, here's a summary of this week. We have the previous week's rank and this week's rank. So you can see there wasn't a lot of shakeup here. Gold and silver switched between 1 and 2. But the first thing I want to note is every single one of these things is down on the year in the year 2022. So the precious metals have done by far the best. They're only down 2 or 3%. The cryptocurrencies have done the worst. Bitcoin did rally from about 2 o'clock to 4 o'clock on Friday. Bitcoin had a 1,000-point rally, and that helped quite a bit. But even still, it's down 18%, and Ethereum's down over 30%. So precious metals have done the best. Cryptocurrencies have had the hardest January so far by far. And then the Russell 2000 and the NASDAQ are both down around 12% just in January. So for those of you new to the market, that is a very, very bad month. And it wasn't a great month for the S&P either. It was down 7%. The Dow was down 4.44%. I don't follow the Dow that much. It's 30 stocks. It does not at all represent what I invest in. It's a representation of the large cap blue chip stocks in the stock market. So if you're not comfortable doing your own stock picking, or if you don't have the time to do the proper due diligence, you can invest in a fund that mirrors either the Dow or the S&P. In 2021, you would have had a good year. Some of those were up considerably. Those vary, and the amount that they can be up is limited. You're not going to double your money in a year in an index fund. However, you're not going to lose all your money in an index fund either. So everything's got its pros and cons. So you can see that the Russell 2000 slipped from 5th place down to 6th place. Despite the rally on Friday, it had the worst week out of all of them, and it's having the worst year so far out of all of them. And from its highs back in November, it's in bear market territory, which means it's down over 20%. There's two things on this chart that will most closely mirror the stocks that I invest in. And they are the Russell 2000, because that is a representation of small cap companies, and Bitcoin, because I invest a lot in the Bitcoin miners. So those are obviously derivative from Bitcoin. They should represent a leveraged play. So as Bitcoin goes down, my portfolio will suffer worse. As Bitcoin goes up, they should outperform Bitcoin substantially. So you've got to do your diligence and pick the best stocks even inside of a market like that. So as you guys know, I've gone with Bitfarms, CleanSpark, and Hut 8. So again, none of this is financial advice. I have a high level of confidence in those three companies and their stocks. They're all down in spots where I don't think they belong. So I think there is massive upside. Most of those stocks would have to do a double just to get back to where they were trading a month or 2 months ago. So I see massive opportunity there. However, you will see that leaves us down 21%. So it leaves us in between Bitcoin and Ethereum. So obviously our goal is to be number one on this list. If we don't end up number one on this list, then we will consider that we did not succeed. We've got some ground to make up, but again, that's a part of what's happening with the stocks that I'm picking. These small cap, high growth stocks have been in a free fall. So I said right from the beginning of the year, I don't know when the bottom is. I will continue to dollar cost average in as opportunities present themselves. And there's still stocks I haven't even opened my position in yet. So again, if you want to know what my watch list is, just check out some of my videos. I'm not trying to get into first place on this list next week. That is not how I trade. I'm a buy and hold trader. I do some swing trading. I'm not a day trader. I'm not looking for short-term opportunities. I want to end up number one on this list by far. And if it takes a month or 2 or 3 or 4 or whatever it takes to get into that position, then that's what it's going to take. We've got almost 1 month down. January's over. We got 1 trading day left. We got 11 months to go in 2022 to see where we end up. Our goal for 2022 is to finish number one on this list and obviously to make money. And our long-term goal for this challenge is to take $10,000 and turn it into $100,000. So thanks for watching, and we will see you in the next video, and then we will also see you in next weekend's update of the 10K challenge.